Alright, let's talk about the key things to look for on a balance sheet when you're thinking about investing in a company.
Hi, I'm Linda and welcome to Life of the Big Four, where we give career, life, and study tips for a successful and prosperous business career.
In the world of accounting and finance, this financial statement provides you with a measure of a company's financial position at a given point in regards to assets, liabilities, and equity. The key here is to quickly be able to look at this and determine if a company is in good financial position. The first quick analysis you can measure liquidity with is the current ratio. This is like seeing if somebody has enough cash on hand to pay off their car payments, their mortgage, and their credit card statements. So you're trying to figure out if the company has enough current assets to cover their current liabilities. Therefore, the current ratio is current assets divided by current liabilities. Let's take Southwest Airlines, for example. If you take a look at their 10Q filed for the first quarter of this year, on their balance sheet you can see that they have current assets of approximately $7 billion and current liabilities of approximately $10 billion, giving them a current ratio of 0.7. You want to use this and compare them with other airlines within the industry and take into account of what's going on in the world. Right now, COVID-19 is causing everyone's current ratios to be down. So in relativity, Southwest is doing pretty good. This tells you that they are less likely to default given the current circumstances in comparison to their competitors.